Ashi Anand is also with us. So, Ashi, let me take a view from you as well on the markets. Do you think a lot of spaces are now getting overbought, overvalued, and one needs to be very, have a lot of caution now in making fresh investments into any of those verticals?
I would quite think so. As in, if you're just looking, especially in the small and the mid-cap space, right? You've seen very sharp run-ups. Especially in anything related to capital goods, defense, railways. Some of these have started becoming extremely expensive. I think we're starting to really counter in a lot of the optimism around some of these themes. Some of these actual implementation and actual growth around capital goods will take some more time. But you're actually factoring in all of this positivity upfront. And you're seeing this in this space, but you're seeing this across the range. We are especially more concerned around mid and small caps as compared to the large cap space. We're clearly seeing greater value and greater comfort in large caps. So that's broadly the way we're seeing the market.
Ashi, I want to talk to you about the signs which you look for. Is it valuations alone? Is it the way some of the micro cap IPOs in the SME side getting a 6, 7, 10, 20 crore IPO, getting a 10,000 crore subscription interest? What are those signs beyond valuations alone which you look at, which have historically helped you, spot the tops in micro caps or small cap, mid cap area of the market?
So there's clear evidence, right? So what you indicated, a lot of froth around IPO market, that clearly is an area of concern. You can also see this around certain themes which are kind of more popular. So you start seeing valuations start to have a disconnect with underlying fundamentals, starting to really factor in a lot of the growth, and you start seeing valuations of companies without very strong cash flows, without healthy ROEs, balance sheets not as great, kind of starting to command 50, 60, 70 P upwards. So you start to kind of very clearly see signs of froth being built up in certain areas. And that is one clear indication. You can also see this in terms of the way small caps and mid caps have outperformed large caps. And the third key indication, everyone in the market knows some of the names which are the higher quality names and some of the weaker businesses. As you start getting closer towards market peaks, especially in certain pockets of the market, you start to see some of the lower quality names actually start to move up quite a lot. And you have clearly been seeing signs of this over the last month.
Point taken. So that's the kind of verdict coming in on the market moves right now. But just wanted to address some of the stocks and news. And of course, there were large deals that happened on Nykaa, IRFC and BKG. In fact, Nykaa is seeing one of the biggest moves that it has seen in a monthly basis. And it's not a very big move. It's just a 3%. But given the fact stock has been underperforming, we're just highlighting that. Order wins have been coming for Dilip Bilkon and RVNL. So those are a couple of counters. And then Raymond, of course, deserves a big mention, given the fact a couple of brokerage initiations have happened right from Jefferies as well as Motilal Oswal. 2,600 is the kind of target that these brokerages are talking about, despite the run-up that we have seen in the stock price already, given the fact they're talking about that growth and simplification is going to come by and the past concerns on debt and corporate structure have been addressed. Ashi, do you look at this one closely, Raymond and the rest of the textile quasi-realty kind of plays?
So we do not Raymond specifically, but we do kind of look at the branded apparel play space. That is a space that we do find quite appealing over the longer term. Obviously, it's a direct play on discretionary consumer demand in India. And if you look at global examples, as an economy crosses a $2,000 per capita mark in terms of income, you start to see a big rise in discretionary spends. And branded textiles kind of fits very well within that space, right? So this could be branded textiles. You're also seeing real estate starting to do well. And real estate, you've actually had a lost decade in terms of really nothing happened in the real estate space between 2010 to 2020. So residential real estate is another space that we like quite a lot. We are a bit mindful about commercial real estate because we see work from home risk kind of playing out there. On branded apparel or other discretionary consumption names, while the growth potential is very appealing, the main problem is a lot of this is really factored into valuations. So one really does need to look at how much you're paying when you're buying into these names.
But Ashi, what about the entire QSR space? Do you have a favorite there amongst the likes of Sapphire, Jubilant, Devyani? They're all on fire today.
So QSR, you're seeing a clear divergence in trends. So I think pizza as a category is clearly quite significantly under pressure. You've seen milk prices and cheese prices move up. So we kind of just wait out any exposures around pizzas, as in any of the stocks with large pizza exposures, the Domino's and the Pizza Hut franchises. We probably steer away from that in the near term until you don't see some kind of deflation in dairy prices. That said, the whole kind of burger franchises are clearly doing a lot better. So some kind of bets around there could work. But the main concern again here is around valuations, as in you are really factoring in a lot of the growth. And some of these franchises have really just seen growth pick up recently. We'd like to see this kind of growth sustain over a slightly longer period before being comfortable with the valuations where they are at this point.
I have a question with Asi on the new IPO which has got listed, the Pugalia IPO which got listed today, 60-70% premium to the issue price. If you may have, Ashi, have you tracked that IPO? It's a small cap infrastructure slash kind of a EPC company, Vishnu Prakash Pugalia, or maybe the space, because the order flow coming to their side is very good, and we got the management also earlier in the day, still at 148.49. Have you seen that space? Have you looked at it?
So we've looked at the space for sure. I'd rather not speak too much about the specific company, but if you're looking at the space, you're really having a lot of traction around government spends on the entire infrastructure space, and you're seeing this across kind of segments, roads, ports, airports, etc. As we kind of start moving into an election kind of a season, I think you're also seeing a lot of traction here. Over the last 2 or 3 budgets, probably for the first time in the 20 plus years I've been kind of watching budgets, you've actually seen capital spends outpace kind of consumption spends of the government. So there's a very clear impetus of the government towards improving infrastructure in the country. And there clearly is a very long space to grow. So there is very clear headroom for growth. And valuations across most infra companies are still not extremely high. Now, while there is attractive growth opportunity, it's important to understand that these businesses aren't very high quality businesses on their own. They typically aren't free cash flow generating. There is a large amount of money which gets stuck in working capital. There are kind of advances that they basically guarantees that are left behind with the government post-project completions. You can have delays. So if you're looking at pure financials, ROEs, balance sheets, and cash flows, the businesses don't necessarily support very high premium multiples itself. So as long as infra growth is there, one can look at the space, but we'd be cautious about very aggressive allocations, primarily because of the inherent weakness of these business models.
Coming in on infrastructure vertical as a whole, but Ashi, I'm curious to know, have you been following this entire deal which is brewing in the pharma space, probably the making of the second largest domestic pharma company by market cap, if at all Torrent Pharma does buy Cipla? What do you make of that?
So Torrent has just done extremely well in terms of acquisitions, as in they've got a decade plus track record of acquiring companies and actually turning them around quite well. M&A is typically a kind of space where a lot of companies end up faltering, as in you've seen attractive acquisitions take place, but then those acquisitions not faring out as well as expected. Torrent has really bucked that trend, and you've seen them multiple times actually do very well with the companies that they've acquired. So if they were to acquire Cipla, it does become a very, very valuable franchise. Really no comments about whether the deal will happen, won't happen. But if it were to happen, it definitely becomes a very large and interesting powerhouse. And within kind of pharmaceuticals, we actually see greater longer-term value in terms of domestic franchises because it's a branded business, unlike in the US, where you're selling as generics and that pricing tends to get commoditized a lot faster there. Branded generics in India are closer towards consumer brands, giving you much greater longer-term pricing power. And a powerhouse such as the type you've indicated could be quite interesting, definitely.